Hey guys, welcome to today's weekly analysis. So we didn't upload yesterday because there was something very important I wanted to share with you guys today about trading systems. I did that on the live Zoom session. So the video you're going to get today is from our Zoom session, which is normally live and free for the public. We normally do this on Mondays, Wednesdays, and Fridays at 10:30 a.m. So make sure not to be missing those analyses that we do there. We just look at the markets at wide. I answer a few questions here and there. Sometimes I try and teach a certain trading lesson, maybe what I've personally learned to learn from other people. So today's technical Wednesday analysis, we've covered a couple of few pairs, such as we've gone through a range of pairs: gold, USD card, a lot of dollar pairs, which we're seeing a lot of dollar weakness. So many of these pairs are really rising at the moment. We've looked at oil, we've looked at gold. Gold is in that new territory, new highs that I really urge you not to try and short it. Even if the market goes down, wait for it to go down, get that pullback before we sell it. Don't rush into selling it. But if you're buying, continue buying gold and ride it far higher. We've looked with the team as you'll watch in the video. If we continue rising, we're looking at targets at 2130 level. So that's what we've covered in this analysis. I hope you learn and enjoy, and make sure to join our Zoom sessions next time. We have a public WhatsApp group where we share these links, so make sure to contact one of the team members or click down on the links below to get our contact or where to find us, and you get a link to that WhatsApp group. So that's all I have for you guys. Let's jump into the markets, and I hope you enjoy. What's up, everyone? Welcome to today's chat room. Dollar weakness, man. Dollar weakness. Before I even start everything, dollar weakness. Dollar weakness. That's what I'll be covering today. Dollar weakness. A dollar index might continue dropping. Euro USD might continue pumping. USD cards down. GU up. Aussie dollar up. US oil up. GA, that's not a dollar pair. Gold, don't try shorting gold. I've just shared that on the Instagram live feed. Don't try shorting that pair. Anyway, I've started today. I've not started officially, but welcome to today's meeting. So as I've said, my name's Caleb. For those who know, for those who do not know, this whole week, for the past few weeks, we've been looking for dollar strength to come in, but it doesn't seem to be coming in. We've been having those few pushes to the downside, but at the end of the day, the bulls still keep winning. So I'm not having any trade, no trade is running. Things are quite still bullish. You can see gold is in new highs. That's not going to stop anytime soon. We might see, I don't, when new all-time highs. I don't even know what targets people have, but this thing might continue pumping. And since we're new highs, it might just continue. Don't try shorting that pair. You might lose a lot of money. So with that said, let me just share the screen. I don't have much today. So today we'll just be doing a lot of recap what has been happening in the markets. So that's mainly what I'll be doing today. So we're looking at this gold, people. Gold. I still have a few charts I'm looking at here. You can see the red ones I've marked are the ones I'm paying attention to. So that's Aussie dollar, GU, and DXY. I'm looking for those dollar weaknesses. So anyway, we're looking at gold. Gold daily chart doesn't show any weakness. So remember, we're in this channel, okay? We're in this channel, we're in a third wave, which might continue pumping higher and higher. So if you use pivot points on the daily chart, targets we're looking at is 2130. That's R3 for people who use pivot points. It's at 2130. So it's also in line with sort of this channel. This channel, when we're in a bull market, this thing can be broken anytime soon. So don't try shorting this pair, just stay out of this pair. I've not been trading this pair. As I said on Monday, I'm looking for less volatile markets so that I can recoup most of the mistakes I did last month. So stay away of this market. That's gold. You can stay in it if you're trading the long side, okay? So if you're trading the long side, trade this pair, man. Just go for it. Remember on Monday when we talked about this pattern, remember we sort of had this sort of pattern, sort of like this. So it was sort of like an ascending triangle, okay? So we sort of had this ascending triangle, just put it nicely, which was beautifully broken yesterday. So we sort of had that, and then we had this. If you use the LO2 count, just know how many times the market has bounced off the area. So A, B, C, D, E, we got that good E, market came and pumped up. You saw that break over there, market has not come back down ever since. So this was a good break of the ascending triangle that we looked at on Monday. Ascending triangle can either lead to two things. Either we break above or we break below. So it's, the goodness about this, it had really consolidated here, so it was a good sign to go up, but I wasn't paying much attention to this. So for me, it's not a missed trade because I wasn't paying attention to it. Just because the market is moving and you're not participating on it doesn't mean that you've lost the trade. So never confuse the two. It's just that the market has moved and you're watching that. So that's fine for me. Continue pumping, might get a, I don't see any correction on this because I'm not seeing any correction coming. The daily chart for yesterday was very bullish. So as you can see, here's yesterday's close, very bullish. So using textbook trades, this was a Marubozu candlestick. You don't want to bet against it, okay? It's just like these previous ones that you're seeing here. All these previous ones are all bullish indicators. Apart from that, GU, what's happening here? So I remember I was looking for a short on this pair. So I'm not currently on the trade. We shorted it Monday, Tuesday, we had good shots. But now, just give it time, because what I was looking at, you can see this resistance level was the level I was paying attention to. But what happened is that we have this double doji formation, okay? So if you zoom in the daily candlesticks, Monday and Tuesday close, all of them a lot of indecision. The Friday close was a very bearish signal, but these closes for yesterday are showing that market is still not decided on which direction it might go. So what I'm expecting either two things. We might come and break above this previous resistance. So market might continue pumping to the upside. That is not a nullified trade because we still have this channel information, okay? This channel information. So we still have this channel. Market might respect it. We might break to the upside. What might happen is that we might now break it, maybe retest this level before we continue going further up. But for now, I'm not having any trade running on this one. 4-hour chart is what made me not stay in this trade for long. And why is that? Because of this pump. You see, if you use pivot points, okay? If you use pivot point, this level P, I hope it's clear. Market tried to close below with that strong momentum. This was between 12 to 4 p.m. Immediately after New York opened, the market came back up. So I'm out of this market, okay? I'm out of it. I'm not watching anything at the moment on this. So market might continue pumping to the upside, maybe get a double top formation before it goes down, or just break to new highs. So that's what I'm watching on GU. Oil is pumping, guys. Oil is pumping. Ken is on this trade, I bet. So he'll be here on soon, maybe next week or Friday, I'm not sure. He'll show you what he was looking at. So oil is still pumping. If you're using a small account, I'd really suggest not to trade gold and oil, because one or two things might happen. One, you might get a good trade, which might be your luck. You might make a lot of money, and that is not, it might be a good, you might make money on a bad trade, which is easy to happen because it's almost, when you're starting off, it's like gambling. So you might get that good luck. This market might give you money, but if you try to do that a couple of times, it will still take its money back. So if you're trading a small account, try and focus on the dollar, on the Forex pairs rather than the commodities like gold and oil, or don't trade also Dow Jones. They move quite volatile. So this pair, oil still might continue this uptrend. I'm not looking for any shorts at the moment. Yesterday, on Tuesday and Monday, we had those strong bullish closes. So I'm not betting against this one. I don't have much analysis on it as well, so I'm still watching this one as well. If you use pivot points, yesterday we had a good rejection of the pivot point. So my level P, this, what is it called? Hammer, pin bar formation was a good pin bar close. Market has been shooting all the way up. We failed to close below the pivot point on the 4-hour chart for this week. So oil continue going to the upside. Aussie dollar pumping. So pumping is pumping, man. It's not stopping, man. Bulls, as I said a few weeks ago, we assumed that
the assumptive theory. Keep that in mind. Just write it down if you can. We assume the trend is correct until we're proven otherwise. This one has not proved us otherwise. We came and found a third bounce of the trend line over here. So if I mark that for you, so we had one bounce here. We got the second. These are both second bounces over here. And then now we got this nice bounce over here, which closed as a pin bar. Very good close. And then market has been shooting further up. It also found the support at this previous support region. So new highs might come on this pair. A lot of dollar weakness still in place. So this pair might continue going up. Okay, so you can plot this channel. You can see this bounce over here. This bounce, you might be looking at maybe another bounce up here, which is in line with R3 for those people who use pivot points. So it's in line with R3, a good target if you want to trade this pair and go long. DXY is really still dropping. I can do Euro USD for you because it's almost like DXY. You can see also pivot points are respecting above the P level. We're still within this sort of market formation. This bounces, okay? This sort of channel formation. So not yet bear market, not yet a bear market. We'll be looking for last week's highs maybe to be touched, and then we'll know whether this pair will be going further up or further down. I remember on Monday I did NZD USD. So for the people who do that pair, NZD USD, I'm seeing it's pumping to the upside. So sort of following the Aussie dollar narrative, because they sort of, these are antipodian pairs, basically the pairs for down there, like in their own world, Australia and New Zealand down there. So they're called antipodian pairs. So they sort of tend to follow in the same direction. Not 100%, but most of the time. You can say over 75% of the time. So if the dollar, Aussie dollar is moving up, expect this one also to be moving up, but maybe with different multitudes, not the same. So watch that. I don't trade this pair, so nothing much to be said on that. I think I've gone through all the pairs of GA. GA, we sort of had this good, if you remember, we have sort of had this channel formation. Let me put it clear for you. So I remember a few weeks ago, we talked about these longs. If you take this, we sort of had this pattern formation. Let me adjust that. So I hope one thing I'm trying to teach you guys is to be able to be flexible with the market. If things change, try and change together with it, okay? So we're looking at this. So we had this channel formation, market came back up, and we're seeing we've covered this whole distance. So when you're trading channels, one of the things you're looking at is once you break the channel to the upside or whatever direction it's going, we're normally looking at where the channel started around here. That was where our target is. We sort of came shy of that area. So sometimes it's normally best to put your target profit at let's say 90% of this move, not always looking for that exact target, okay? So that's what we got on this one. And we might still get that sort of correction, but sort of GA might be pumping also to the upside later on, maybe next week or this week. Someone is asking about GBP, JPY. Taras was covering that the other week, so I might have a few ideas about it. So as you can see, I've not updated this pair. I use these pairs mainly to just look at different chart patterns, not to trade them, but just to analyze them. GJ. So let's see what's happening here. What I'm seeing is sort of, we are going back to previous peak levels that we had. So around here, previous high, this on the 4-hour chart. I've not done that top-down analysis that I always do, but something you can pay attention to. So looking at it, if I look at the pivot points, we sort of tried to respect P yesterday. We came back to around P, around this level. Market didn't get that nice touch, and sort of it's been moving further up. So expect this pair. This pair can also continue moving because I'm seeing a lot of the pound pairs is moving to the upside. So this can also be affected. It can really be affected to the upside. So I'm not sure about this one. I won't lie to you. I'm not 100% sure. Let's look at the daily chart. I might do a better analysis maybe and recover it, talk about it on Friday or next week. But like I said, we are sort of coming back to these previous highs where we had a peak before. So watch for this level. Whoever is asking, watch for this level. This previous spike level where we currently are. Okay. So watch for this level, maybe to look for shorts to come in as resistance, that double top, or a break and retest of this region. So look at that, look at that. But mainly since market hasn't respected P this month, we might get that pullback to this level before we go and break up to the upside. So pay attention to that. What else? What else? I've covered most pairs. Dollar, for those people who look at, what is it called? US 30, Dow Jones. I'm looking at this pair. This was a beautiful bull market. So I sort of have this pattern forming, which A, B, C, D, E. We might get short up here after forming this double top. Once market comes to this previous high. Yeah, if market comes all the way here, we might be looking for those shorts at 27,600. Yes, yes. Someone is asking if this is trading view. Yes, this is trading view. That's what we use to analyze the market because of the multiple tools it offers. So that's what we're looking at on these pairs. I think I've gone through most of the pairs that I look at. I think I've even gone through all of them. Have I looked at USD card? USD card is in a free fall, my guys. Free fall. Still respecting this channel information. Okay. I remember I covered this on Monday. At that time, I was looking for maybe this pair to continue to the upside, but the trend, man, don't bet against the trend. If something I can teach you here that you can take home, don't bet. When the trend is very strong, don't try and bet against it. This is what is happening on this pair, continuing to push to the downside. And this might continue to drop, looking for targets at 1.30 level to the downside. We might continue respecting this channel, looking at the 4-hour chart. Nothing is showing any bullish momentum coming. That's what we got yesterday. Pivot points were respected, and this market is continuing to drop. So this 1-hour chart, do I have anything? There was a channel I had, I guess. Yeah, there was this channel I have. So look at this channel as well. This is on the 1-hour chart. There's this channel looking to get resistance here. I doubt. We'll look at it, but if we get support here, I really doubt. It's in line with S3, yes, and the support level, but it's a trending market. It might get a bit of resistance, then continue dropping further on later on in the week. So just pay attention to that. Okay. So that's all I have for today. I don't have much. Pay attention to the news that is coming out. Sorry. Pay attention to the news that is coming out. Tomorrow we have interest rates from the Bank of England. I think it's tomorrow or today. I'll confirm that. But one of the two, you can check for yourself. Just go check your calendar. If you don't know the calendar to check, you can use tradingeconomics.com or Forex Factory, one of the two. They still give alerts. And two, we have NFP on Friday. So what I think might be happening, if we might get that dollar weakness to come, I'm not betting on it, okay? Not dollar weakness, dollar strength is maybe after NFP this week. So maybe next week. But what I'm paying attention to is looking for the weekly close to give me a good bearish signal. Markets might continue pumping, like the GBP USD. If it continues pumping, I'm looking for 1.3350. So look at that level. It's a certain resistance level at that point that I'm looking at for targets. If the pairs continue dropping, if the dollar strength continues weakening, the dollar pairs. So that's all I have for today. I don't have much. Someone is asking, the chart is interesting. Are those channels drawn auto, and which web? That definitely not MT4. Yeah, it's not MT4. We use TradingView. I saw also Derek answered you, so good. Thank you, Derek. So we don't use MT4. They're not much. I just use MT4 to execute the trades. I don't find it that. Some people still use it. I know many traders who are successful and they just use MT4 because they've reduced the amount of indicators they use. They don't use a lot of indicators. So if you don't use a lot of indicators, maybe you're just using trend lines, resistance, you're looking for those search patterns, then TradingView MT4 is totally fine, but we use TradingView. And they're not drawn automatically, the channels, we draw them for ourselves. So once you continue, if you continue looking at the patterns long enough, the markets, it's easy to draw them. You can just easily notify when there's a trend or a channel information, because most of the time I believe market is normally forming a channel pattern. so that you can get levels of support and levels of resistance when the market is trending in either direction. It's just like a ranging market. So it's just that that ranging market is sort of tilted, and then we have that ranging market to the upside. So it always has that support, sort of pattern of support and resistance, whether it's trending or whether it's ranging. So yeah. So that's all. I don't have much for today. That's what I'm looking at. Sitting on cash. Cash is also a position. So that's what I'm doing today, this week. I'm doing a lot. If you remember, I'm doing a lot of testing of the system. One of the reasons we found many traders fail, or what I've been learning, is because it's not that you do not know how to trade or you do not know how to make decisions. It's because you have not formulated a working trading system. So one of the reasons is that, apart from that, it's psychology. But for now, I'll talk about the trading system. So for example, what I talked about the other day, you need to look at certain patterns that are suitable to you. Once you get certain patterns, you need to do back testing and forward testing. Test them and see how many times they occur in the markets. What I was telling you the other day, the statistical report. Get that report. Each pattern, look at it 100 times, okay? So do back testing, just go back, look at different patterns, look at it 100 times. Then you'll get a sort of statistical report to know how many times they work, how many times they don't. Once you get that system working, you start doing it, you start seeing these patterns forming, and whenever that pattern starts forming, it will be a no-brainer. You sort of just take that trade. It's sort of like driving a car. When you're driving a car, when you're starting to learn, it's hard to know the signs, to know the roads, whatever. It's still hard to know what to do. But once you started knowing it, you become sort of doing it subconsciously. When you see the red light, you know you have to stop. The green light, you know you have to go. So that's the same thing with a trading system. If you do not have a working trading system, then you can't trade profitably in the market. That's why many of the times you'll find me sitting on cash. So I'm sure many of you might be asking, why don't I take as much trades? We are different. We have different personalities. I'm more conservative. Ken, you'll be seeing many of the times he has many trades. He's more aggressive. So whenever he's analyzing the market, you can find that he's in a trade. Personally, I'd rather sit out, protect my money, because I normally have a trading plan, and part of my trading plan is long-term survival, and part of that long-term survival is doing proper risk management. And by doing that, sitting on cash is the best risk management you can do. Wait for that market pattern to form, then take that trade. So I hope you're taking notes and you can do that. So formulate a system and make sure it's working. You might be trading a system that is not working. For example, trading Elliott waves. I do a lot of Elliott wave analysis, but Elliott waves are very, very subjective. You might be seeing something people are not. So whenever you're doing that, you might be getting a lot of wrong trades. So you have to be very objective when you're analyzing the market. For example, when you're looking at a resistance level, everyone can see that resistance level. So if it's broken, like what we're seeing on gold, if it's broken, then it's very likely the market will continue to the upside. If it's not, then leave that alone, okay? So that's what we're looking at. Pay attention to those patterns. Another good pragmatic or practical example of sitting on cash is sort of like a sniper. So if you've watched a lot of movies, especially the snipers, you do not just shoot all the time. It's not like this stupid shenanigans, people always fighting. You know, these movies you watch and people always shooting, and they're always missing. So it's the same thing with trading the markets. You're always shooting and taking trades, but you're always taking the wrong trade and missing. But the sniper just stays. You can stay at a certain position for 12 hours even. And when the target has come into that corner where you know this is the perfect shot, that's when you take the trigger, that's when you take the shot. So that's the same thing with the market. It applies the same thing. Patience. Wait for your analysis to work out. Do not push the markets to go in your direction. So let me not talk much. It's about 11. I have a lot to do today. So that's all I have for you guys today. And peace. Have a good week.